Hey, everybody. Sorry, Chuck Barone on a fabulous Monday, June the 17th, 2024. Another week of crazy. We're off and running, breaking records, guys, breaking records. S&P, another record today. It's the 30th time this year the S&P has set a new world record, or a new record for the S&P. I guess that is a world record. Crazy, crazy, crazy. Because I don't know. Maybe it's just my natural tendency. I'm an Italian guy. Italians tend to look at the world kind of a little bit different than regular normal people do. And we kind of tend to have a little bit more of a what can go wrong kind of thought process. And I see just so many storm clouds on the horizon. The economy just keeps on chugging along. Companies keep making money. It just doesn't make, it's not meshing well in my brain. It's like, I see the consumers, I see everybody angry, I see everybody pissed. At the same time, everybody's going into record debt to keep spending money, which is completely the antithesis of what we've been teaching on this show forever. But anyway, before I get ranting along here, let me take a half a second. Welcome everybody to the show. As always, thank you guys for your support. Nice to see all the regulars on. Hey, Donna, Ghazi, the usual Salty, Big Smoke, Sarge, Attila. We got Jordan on today. The regular crew. Nice to see everybody on there. It's Monday. Let's have a great week this week, man. We're going to roll. All right, so let's take a second. Let's talk about these markets. So again, now I looked at no data really came out today. I guess it's just optimism over rate cuts they think are coming. Maybe it's the anticipation and the happy we're going to have Juneteenth on Wednesday, and the markets will be closed, so we'll have a nice day off, everybody. Juneteenth, man, a new holiday with a great name. Anyway, markets today. So look at what happened. The Dow Jones up 184 points, 38,778. Great number. NASDAQ, once up 168 points, 13,857 on the NASDAQ. The S&P all-time record again, plus 41 points, 5,473 on the S&P 500. 30 times. And now you got everybody raising their estimates. Goldman Sachs, BofA. I saw a couple other companies coming out today saying S&P 6,000. S&P 6,000. Another 10% they're expecting the S&P to go up this year. It reminds me back in the day in 2008, before the big kablooey happened, when everything was looking so terrible, but the market was the dead man walking. It hadn't actually collapsed yet. And Peter Schiff was talking about how, everybody was talking about how much houses were going to keep going up. And Peter Schiff was like, you guys are crazy. Houses are not going to go up. They're going to crash. Now, I don't know if a stock market crash is coming, but I certainly feel like there's a pretty big correction going to come. Nothing goes straight up, guys. And these markets have been defying gravity. This U.S. economy has been defying gravity. I've been telling you guys, the Fed needs a recession to get inflation to 2%. Bottom line. So they've been trying to engineer the softest recession they possibly can. That's why they haven't continued to raise rates. Not to mention the fact that it's bankrupting the U.S. government, paying higher rates, but that's another subject. So here we have it, man. New records on the stock markets going crazy. At the same time, bond market sells off. So maybe some people taking money out of bonds, putting it into stocks. 10-year, up 7 basis points today, 4.78%. I'm sorry, 2.87. Can't even read my own writing sometimes, guys. Sorry. 4.28%, up 7 basis points today. The 2-year, 4.76%, up 8 basis points this year. So the bond market selling off, yields jumping again. Again, if people think rate cuts are coming, why? Dollar down today, down, not big, down 17 basis points, sitting at 105.35 on the index. Again, if rate cuts are coming, the dollar should be reacting like this, but the bond market shouldn't be selling off. Weird things, weird times. Dollar falls, guess what? Weirdly, so does gold and silver. Usually when the dollar's down, gold and silver jump. Not today. Today, gold falls $12.80, $2,321 even for an ounce of gold. Silver falls 12 cents, $29.51 for an ounce of silver. Both still pretty good prices for gold and silver, but they're both now meeting some resistance they need to break through, or you could see a little bit of a correction in gold and silver going backwards. Oil jumps today, all on this petrodollar, I think, and then you got the continuing bullshit in the Middle East. But oil jumps today, up $2.01 per barrel, 80 back up over 80, $80.46. I really don't expect any kind of real rally in oil. We'll see these kind of spikes like this, but I don't see oil rallying up until they can show more demand. We already saw the U.S. surprisingly, stockpiles increasing, not accounting the petroleum reserve. So oil, like I say, you get these spikes from time to time, trading anomalies. I don't really see a trend with oil prices jumping real high. Bitcoin today, again, uncoupled with the stock market, very strange, down $209, 66,277. So it looks like the correction is on in Bitcoin. Looks like we're going to have to test some lows to get a little bit of a bounce. And we'll see. Bitcoin, I think the future is super, super good for Bitcoin. These ETFs, you're going to see other cryptocurrencies get their ETFs soon, I believe. It's going to make crypto more of a mainstream thing until it isn't. And I think that's going to continue to see prices rising as the regular investors get in. They make these ETFs available in people's retirement accounts, stuff like that. You'll see the price continue to rise. Okay, so like I do every week, on Mondays, we're going to talk about the data we're going to get this week. I'll try to go through this briefly. Today, we supposedly get the Empire Manufacturing Index, which is expected to be down pretty dramatically. I took a look at it. It was actually up, but it wasn't up enough that the number was not a negative. It needs to get above this certain number to not be negative. So Empire Manufacturing numbers not looking good, but I really discount that because that only shows New York State only. So it's not the state of manufacturing in the U.S., just the state of manufacturing in New York. Who cares? Tuesday, tomorrow, we will get business inventories. That's a good indicator of how prices are going to go, because if inventories start to build and they're expected to be up tomorrow, that usually leads to prices coming down as they need to blow that inventory out. We'll also get capacity utilization, which is expected to be up, surprisingly. We'll get industrial production, also expected to be up. And tomorrow's the big one. Tomorrow, we'll get retail sales, and that's also expected to be up. That'll give us an indication of the state of the consumer. Now, they're only expecting a very small bump up. We'll see where that number comes in. I'm sure we'll be talking about that tomorrow. Wednesday, like I said, Wednesday, the markets are closed for the Juneteenth holiday. You guys barbecuing? On Thursday, we will get building permits, expected to be down. We will get jobless claims, expected to come in at 236,000 this week. We'll get the Philly Fed. The Philly Fed's expected to be up a little bit. We'll also get housing starts, which are expected to be down. And on Friday, to finish the week, we'll get existing home sales, expected to be down. We'll get the index of leading indicators, also expected to be down. So we got some good stuff coming this week we're going to be talking about. Of course, there'll always be the who knows, Fed people talking. Now they're talking about rate cuts, trying to talk everybody down to one cut this year. I think that's where we're going with it. At least that's what they're talking about. We got a couple I saw today, a couple other Fed yo-yos expected to be out talking tomorrow and Wednesday. We'll see what they have to say. Fascinating times, guys. All right, so let's talk about news today. Not a ton to talk about, but I have a couple of little things to talk about. Um, Bitcoin ETFs. Guys, these Bitcoin ETFs blasted off, right? $53 billion now invested in Bitcoin ETFs. That's just in a few short months, guys. But what's happened now is it was like a rocket ship, and that rocketed Bitcoin much higher. We saw that happen. What's happened now is it's kind of leveling off. And now, actually, over the past, just over the past week, they've had people pull $580 million out of these ETFs above what's come in. That's what's showing up now on this Bitcoin price. What's going to be interesting to see is if these ETFs, showing these ETFs are going to track it, because there's so many ways to buy Bitcoin, not just the ETFs, right? But if we're going to be able to see the price of Bitcoin, how it's going to be moving by trends in these ETFs, I think that's going to make it a little more predictable, way easier to decide when to get in and out of Bitcoin, right? Okay. Housing, man, guys, still in the crapper going. I don't know how they're going to fix it now. It's getting so bad. It's getting so bad. Unless you're selling a piece of real estate or you're wealthy enough to come in with some significant down payment money, you got no shot at a house these days. People flipping out, right? You got payments going up like crazy, right? What's happened is you got everything going up that contributes to that payment. Interest rates are high. Okay, so that raises the amount of interest in your P&I, your principal and interest part, right? But when you get a mortgage payment, there's more to it than just the mortgage itself, the principal and interest, right? You also have property taxes. Guess what? Ratcheting those up. You also have homeowners insurance. Guess what? Depending on where you are, really jumping. But even here in Las Vegas, insurance rates up way more, I'm guessing, than the amount of claims they're getting. What's happening is the cost per claim jumping. This greedflation is affecting this economy in more ways than it just at the grocery store, guys, right? So and then you have mortgage insurance, because these prices are so much higher. The down, what they owe compared to their equity positions are so much smaller. Mortgage insurance going up. So every aspect of that payment on real estate going up. Mortgage payments are so high, they're making $2,000, $2,200 rents look good. It is absolutely bonkers, bananas, crazy. And guess what? Median price here in Vegas, think it's going down? No. $279, up another like 10 grand. It's crazy, guys. And I used to ask back in 2008, 2007, at my office, my nickname was either Dr. Doom, the guys were, or Dr. No, because I was the no guy. Guys were, tripping on me because everybody was all exuberant about this real estate market. At that time, everybody was just going, yeah, man, the markets are going to go up forever. And I was like, do you really think every bellman and busboy in Vegas is going to live in a $500,000 house? Do you believe that? Because that's where we're going. And guess what, man? Now we're right back to that, way higher than that. Actually, back then, I think the median price was about $380,000, which I thought was incredible. Guys, I don't think we're going to have the same situation we had like in 2008, where it's, just an absolute catastrophe of foreclosures and stuff like that. Or what happens is a real estate market that's changing, where you're going to have people who own property and always will, their families. It's going to become a family thing like it is in Europe now. And you're going to have people that never are, because they're going to be completely priced out of the market unless they want to get to like the most obscure places or out in the boonies, away from urban areas, which are typically the most expensive. So real estate in the crapper, and I don't know how they're going to save it, guys. If interest rates come down, all that's going to happen is there's going to be a flood of people into the market. They're going to want to buy houses. There are going to be tons more buyers than there is sellers. So that's going to create that imbalance, which will create a seller's market. And what are sellers going to do? They're going to raise prices. So every offset you get by a little bit of rate reduction is going to be offset by raising prices. You think the governments are going to cut property taxes? No, that's the quiet one. That's the one most people don't complain about, especially renters, because they're not paying it. They're going to cut insurance costs, or are they going to keep going up? I don't know how they're going to get this in order. And I usually have answers. That's the really weird thing, right? And I've thought about this like, okay, really, what levers can they pull to make real estate something that, like it used to be kind of a progression in your life, right? You become an adult, you get a spouse, you and your spouse together, or you separately. A lot of people buying houses before they're married, but you get a spouse or a significant other, or your partner or whatever. You buy a house. The house equity grows. You buy another house. Usually you're getting bigger houses because your family's growing and you have equity to trade in to move up to bigger houses until you get to be like me, a dinosaur. And then typically what will happen is you'll sell your big house, downsize into a smaller house, put the excess money in the bank so you have, retirement money to live on. That's been the way it's kind of been done for a long time in the US. Well, now that's all out the window, man. So I got to see how they're going to replace it. Going to be fascinating stuff. Okay, let's get to this petrodollar, because I know that's what the headliner was, and I know that's what a lot of you guys are here for. Here's the deal, guys. This 1974 agreement everybody's talking about was not directly a petrodollar agreement. It was signed by this Prince Fahd before he became king, and Kissinger. And what it was, I wrote it down here. The agreement was never a petrodollar agreement, okay? Petrodollar searches on Google last week hit the highest number since 2004. Crazy. Anyway, the 1974 agreement was called the U.S.-Saudi Joint Commission on Economic Cooperation. The agreement originally was for 5 years only, but was extended 5 years until it reached 50 years. Okay, the Saudis continued to sell oil in sterling, pounds, British pounds, after this agreement. They've accepted other dollars, but because everything's priced in dollars, the transportation, the insurance costs, it's made more sense for the Saudis to keep selling oil in dollars. So there's this truth about this. Okay, now obviously, the Saudis are moving to accept other currencies, and that's sensible. They have billions and billions and billions of dollars and dollar-denominated assets. If I was their advisor, I would advise them to diversify a little bit, get away from holding all dollars and having some, the big four, right? Yen, euro, dollar, and what the hell? There's another one. Anyway, yen, dollar, euro, I'm blanking. Anyway, now they're actually hoarding other currencies, Canadian, Australian, obviously gold derivatives. So it's changing a little bit, but it's not the end of oil priced in dollars, guys. And again, as I was saying last week on the show, if they price it in everything, okay, let's say you're going to say, okay, you can get a price in yuan, you can get a price in rubles if you're Russian, you can get South Korean money or North Korean money, whatever the hell they want. What's going to happen is it's going to create arbitrage deals. You're going to see trading go crazy on this, because what will happen is they're going to always have to keep everything working out. Exchange rates change all the time on these currencies. So this is going to be super complex for the Saudis to figure out, because what's going to happen is if you charge this in yuan, but it's cheaper in dollars, even by pennies, they're going to buy Brazilian barrels in dollars and sell them yuan. Boom, 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 computers like this, making Brazilians of dollars. So this is not something that's going to happen abruptly, if it ever does happen. And there's a ton of kinks to work out. So there you have Chuck Barone's take on this Saudi petrodollar bullshit that everybody's trying to make. And then one last thing, guys. I was reading this interesting article. They were talking about the Shenep recession indicator. This guy, Jack Shanep, he was an editor of the Dow Theory. You guys know the Dow Theory newsletter, very, very high quality, been around a long time. The theory works. It's kind of not always super consistent, but it's prudent and smart. Well, this guy was the editor of the Dow Theory, and his indicator is all tied to unemployment. And when unemployment goes up more than 0.3% year over year, every single time, 100% of the time, has indicated recession, has nailed it. Since 1946, there's been 12 recessions, nailed every single one of them. Now it's indicating we're in recession right now because this last unemployment report was blipped it up to 4%. Now it's 0.4% above where it was a year over year. Guess what, guys? 100% accuracy recession coming. And I've been seeing it coming anyway. Here's just another way, another indicator it's happening. Anyway, I'm running way, way, way over. Let me say my goodbyes here. That's it for the day. As always, guys, I appreciate your support. I love each and every one of you. Nice to see everybody on here. Hit the like button, please. It changes the algorithms around. We're trying to build some views on this. It really helps the show. Would appreciate it. And we'll be back tomorrow. It's going to be a fascinating week. Till tomorrow, guys.